Good day to you. It's Clive Maund of clivemaund.com, and first of all, as usual, I'd like to extend a warm welcome to new subscribers to the site and also to the YouTube channel. In this update, we're going to be looking at oil, which is very topical, and the reason I'm dressed like this is twofold. One is I'm dressed in black because oil is black, and the other is that it's getting quite cool down here in Patagonia where I live. And in order to do my bit and conserve fuel, I'm more dressed up, as you can see. So anyway, we'll get straight to it. And first thing I want to draw your attention to, if you don't already know, is that Trump's deadline for opening a Strait of Hormuz, as you probably know, is being put back until tomorrow. He may put it back again, of course. But what he's threatening to do is bomb the power plants in Iran and blow up the bridges, etc. Which is the usual thing they do. And the problem with that is, of course, that it will invite massive retaliation on the part of Iran, which will probably blow up the desalination plants all across the GCC countries and the Gulf, which will create a massive crisis because it will make those countries uninhabitable. So we're looking at a potentially extremely serious situation here, which could, of course, easily see oil go up to $200 or $300 a barrel. So anyway, we're not going to consider the geopolitics of this situation beyond mentioning those key factors. Instead, we're just going to, as usual, we confine ourselves largely to looking at the charts. And we'll start by looking at the latest 6-month chart for Brent crude, where we see that it's in a very powerful bull market. And it's actually quite remarkable that it hasn't actually made much net movement for the last 2 or 3 weeks because it's been consolidating its earlier large gains early in March. It rose very strongly on the attack on Iran. But then basically it's been consolidating in this sizable bull flag that we can see on this chart for the last 2 or 3 weeks. Now, all the technical factors point to it breaking out upside from this bull flag, which will lead to a major advance, probably to the 150, 160 zone for Brent. And at the top of this chart, you can see West Texas light crude, which has already broken out. It broke out, in fact, on last Friday. And it looks to be headed higher. And we'll now proceed to look at the 6-month chart for West Texas on the following chart, where we can see that it was consolidating in a flag for weeks. Incidentally, there was a huge spinning top candle that marked the temporary high early in March, and it went into this flag consolidation. And it started to break out of it as expected just last Friday, and it's kind of remarkable it's taken so long to do so. Brent shown at the top of this chart for comparison. Next, we will look at now this is an interesting chart, this next chart, because this is the chart that I used late in March. I think it was an article posted on the site on the 22nd of March, in which I said that from now on, West Texas, or over the short to medium term, West Texas is likely to outperform Brent because it had become undersold relative to Brent, which you can see on this chart. So I called a comparative rally in West Texas relative to Brent, and that's what we saw late last week, because, of course, West Texas broke out on Friday. Brent didn't, as we saw. This chart kind of predicted that. And now the next one is the up-to-date chart for this ratio of West Texas over Brent. And you can see that the pendulum has swung in the other direction. So if you're an arbitrage trader in oil, you'd probably be better off buying Brent now, or switching back to Brent relative to West Texas. Now, the next chart is interesting. This is the chart also for 6 months for the United States Oil Fund, code USO. And the reason we look at this chart is because we can get some indications regarding trading volume, which you can't on those other two charts, or 2 charts for oil and stock charts. Now, we can see that the enormous volume driving this bull market early in March, or driving that initial up leg, This enormous volume is very bullish, and it suggests that oil is going much, much, well, it suggests that the US oil fund is going much higher, and therefore, by implication, oil itself is going much higher. And we can see also that after that very heavy volume that drove the initial advance early in March, as an upwardly skewed bull flag formed, the volume has died back somewhat in a satisfactory manner, which points to renewed advance. And that's what we started to see on Friday when it at last broke out the top of this flag, and it looks like it's headed higher. In addition, we can see that an upside breakout was portended by the strong accumulation line shown at the top of the chart, which continued to rise as that bull flag formed. Now we'll move on to consider the XOI oil stock index. And I was frankly a little surprised late last week because, we had that strength in oil, but the oil stocks kind of reacted back across this channel, and they tend to move not exactly in sync with oil itself, and are also influenced by the broad stock market. And I kind of took that drop last week to be related to the slightly earlier drop in the broad stock market. But in any event, this chart, as long as that uptrend remains in force, you've got no worries as an oil stock investor, because the channel has held. It dipped to it on Wednesday. It dipped to the channel on Wednesday, intraday. And it looks to me, given that oil is breaking higher again, it looks set to continue higher unless Trump suddenly backs off and climbs down. This oil stocks index looks set to rally back up towards the top of this channel again, which of course is a good reason for staying long oil stocks. Overbought or not, it's still substantially overbought, of course. But interestingly, this is quite a steady uptrend from early in the year. It's just continued to march high. You would have expected it to have been steeper given the magnitude of the rally in March, but it just seems to be plodding steadily higher. And that's it for now. So that's all for this update. If you're interested in following our trades, come over and join us at clivemorn.com, where you'll be most welcome. Have a good week. It promises to be an exciting one, the way things are going. We'll have to wait. The first we've got to wait and see is whether Trump actually goes ahead and attacks Iran if they don't open the Straits of Hormuz, and it doesn't look like they're going to, because that's Iran's big. It's its ace card, and if it gives that up, it's finished. So let's see what happens tomorrow. And but from the look of these charts, it looks like oil's headed much higher. So as a final point I'd like to make to all of those of you who own vehicles, I think you'd be wise to keep your tank topped up, because oil looks set to gasoline at the pump looks set to rise in future weeks probably as well. And if you've got the capacity to store gasoline safely on your property, it would be a wise idea to do so if you haven't done so already. Anyway, that's all for now. Hope you found this interesting, and have a good week, and look forward to speaking with you soon. Goodbye.